Hi, everyone. Really pleased to be able to bring Joe Rabil back to you. He is a technical analyst on Wall Street. He's been covering institutional investors for well over 2 decades. I'd say 3. I might be pushing it, but I don't want to age him, but I think it is over 3. But we used to work together on Wall Street. I would take him in to see big money managers, hedge funds, and long-only mutual funds. And he would review from a technical perspective their portfolios, highlight if there's some technical weakness that might be occurring and therefore they might want to take some profit, and or if there was some really good support from a technical perspective. In other words, maybe they want to continue to add to positions. So we spoke to Joe 2 weeks ago on March the 6th, and what we did today was give you a bit of a perspective in terms of what the market's looking like. Obviously, there's a lot of debate going on in terms of which way the market goes. Will growth outperform value or value outperform growth? What's the impact of that US 10-year yield on the market? So we addressed all of that. And then we also went over his past picks from only 2 weeks ago. And the majority of them are up. There's only maybe 2 that are essentially flat, 2 up, but the rest are up. And then we provided a couple of new ideas today. And if you like dividend stocks, there's a couple in there that I think are interesting. I'm personally going to take a look at as well as some healthcare companies, and also, of course, financials. So hope you enjoy. It's about a 38-minute interview. We tried to condense it a little bit, but there's just so much to talk about. Enjoy, and as always, do feel free to give us any feedback, and we'll take some of your requests next week in terms of stocks you might want him to look at. Have a great weekend. Hi, everyone. Just before we get going, I want to remind you that everything we talk about and discuss should not be considered as investment advice. The purpose of what we talk about on Catherine Murray Media and Markets on YouTube, as well as Catherine Murray in Conversation With on my podcast, should be viewed as informational and entertainment purposes only. Please definitely do your own research, your own homework, and definitely consult an investment professional before making any investment decisions. And also to note, some of us might hold positions in some of the stocks that we discuss. Joe, great to be able to catch up with you again, on the technicals of the market. I think that, we've certainly seen a lot of volatility and a little bit of a concern in terms of what will win at the end of the day, if it's going to be that US 10-year yield putting downward pressure on the tech stocks and that's going to continue, or if we're going to be fluctuating back and forth, and growth and value can both work. So let's kind of just do a bit of a top-down perspective on the markets first, and then we'll get into some of your past picks from only 2 weeks ago. They performed actually very well, and then also a couple of new ideas. Again, all of this for our viewers to understand, this is from a technical perspective, a technical analysis look of the market. So, Joe, why don't we first start with the Dow? What are we seeing in the Dow over the past 2 weeks, and in particular, of course, today?
Yeah, let me go ahead and share the screen. Okay, so I've got the Dow Jones chart up, and just for any new viewers, on the top right is the weekly chart, which is really the most important one that we're kind of focused on, and then the monthly gives us a big wide angle lens view, and that's up in the top left. When I look at the Dow Jones, I mean, actually the chart in the bottom left shows a relative strength line. This white line is the relative strength versus the S&P. So that basically says when the white line is falling, the Dow Jones is underperforming the S&P, and when it's rising, it's outperforming. And if you notice what's happened for the first time since really the beginning of 2019, we're starting to see a shift where the white line is actually crossing above its moving average. And we're starting to see signs of real relative improvement in the Dow Jones. And I think it's pretty important, and I think it's worthwhile for us to let me just pull up a different chart. So this is the growth versus the value. The Dow Jones tends to have a little bit more of value oriented. It is more of a mix, but when you look at it, it's when value is outperforming, the Dow tends to outperform as well. And so if you look at this chart, this goes back all the way to 2000 when we peaked here after making a huge run to the upside where growth was outperforming. Value kind of took over, and for about 7 years actually outperformed, and then in 2007 it bottomed, and we've been in this long steady continuing to accelerate type of uptrend of growth outperforming value. And so what's happened recently, just this year, really in the last 3 to 4 months, we've seen the white line, which is the growth versus the value line, which is essentially the Russell 1000 divided by the Russell value, the Russell 1000 growth divided by the Russell 1000 value. And so that white line dropping off like this is a pretty strong sign that value is outperforming. It's a pretty big reversal, and it's the first time we've really seen this happen in quite some time. So after an accelerated move like that, I think it's pretty important. So I just wanted to bring that up because I thought it's relevant to this Dow Jones conversation. And the action in the Dow Jones, while it hasn't really exploded in terms of momentum or anything, there's definitely signs of relative improvement and overall signs of strength showing up.
Okay, and that's important because we've certainly seen some new record highs for the Dow. And at the same time, too, you often see some, continued pressure on those tech shares. And I know some of the stock ideas you have for us today really fit into what you're seeing in terms of value outperforming growth, specifically taking a look at the Dow. Let's take a look at the S&P 500 as well, though. That's obviously a bit of a mixture.
Yeah, a little bit of a mix. And we talked about this last time. I'm going to zoom in on the weekly chart and this 3,700 area down here, which is really this line moving up as the 18-week moving average. It's acting as support, and 3,700 has been tested a few times. To me, that's the key level. I think even though we're starting to lose a little momentum based on the MACD, a little bit of momentum based on the buying power of the ADX, I still say as long as we stay above 3,700, I think we're okay. A break of 3,700 would really concern me that this could get sloppy, maybe see a longer correction phase.
Okay. And what about the Nasdaq? Obviously, quite a bit of downward pressure there. And I think a lot of people who participate in the Nasdaq actually own the stock-specific stories as opposed to the broader ETF. But what kind of damage have we seen there, and what are we seeing in terms of the resistance and support levels?
Yeah, I mean, we haven't seen a significant amount of damage yet because we're really still in an uptrend. If you look at this, it's still making higher highs and higher lows. We have pulled back a little deeper than the S&P this time. In the rally, this most recent rally, the S&P actually notched a new high. And this is pretty far from a new high. I mean, making a significantly lower high, actually. So it just goes to what we're talking about, where a lot of these growth stocks are just not where people are playing right now. The relative strength in those lines has not been good, probably for about 3, 4, 5 months. The one thing I'll say, Catherine, though, is right at this point, I would not be considering it a major distribution top, meaning when I go through and look at the individual stocks, we're going to look at a few of them in this big cap tech area. They don't necessarily look like they have to go through a major decline. I think the big problem with them is they look like they want to underperform. So especially for my clients who are professional money managers, they need to kind of know which are the best stocks to own over, say, the next 3, 6, 9 months. And I'm sort of the impression right now that that's not really going to be tech, at least until we see some sign of a shift come back into them. And it hasn't happened yet.
And that's actually an important reminder to me. I mean, for our viewers or new viewers watching this, hopefully you've seen the other interview, but Joe and I have known each other for, I think it's at least 10 years now. And of course, I would introduce and take Joe to see institutional investors. So that's always been your client base, institutional investors. And you bring up a point, which is institutional investors have to outperform their competitors. And therefore, if they need to be an outperformer, they're not necessarily going to be in tech. But what I think is really important, as we're probably also having individual investors listen to us, and maybe there's some institutions as well, that individual investors might not want to trade as much and are in for the long game, or at least a bit of a longer hold versus a quarterly performance look. And therefore, what you're saying, though, Joe, and this is important, that tech might not outperform on a relative basis, but you don't see too much damage being done. Is that fair?
Yeah, I think that's exactly how I'd look at it. And One of the things that, because I work with institutions and I think the individual investors out there, I think the benefit in what I'm describing is I don't really like to whip people around. I don't like to say, sell 1 week and then 2 weeks later come back and buy the same stock. I mean, if I like to look for some signs of something significant developing, and if it's a big reversal taking place, then those are the types of things I try and highlight, as opposed to creating, a lot of unnecessary trading. So that's kind of where I'm coming from, just to make sure the viewer knows that.
Yeah, important to point out. So what you're saying then, in terms of the Dow, the S&P, as well as the Nasdaq, you're not seeing any big reversals to the downside.
So not when I look at the indexes. There are individual stocks that I would say have sustained a little bit more damage, but generally speaking, to me, this is more of a shift in leadership as opposed to a big, money just completely exiting one area and going into the other.
Okay, that's important to point out, because there's a lot of nervousness out there right now, and wondering, I think people are really wondering if they're positioned correctly, if there's too much froth in the market, they should be taking a lot of profit. But again, it really does go back, and this is your area of expertise, to the actual individual stock holdings. Again, we'll get to that in a moment, but let's take a quick look here as well at the TSX. What are we seeing there?
Yeah, and so the TNX, a 10-year yield, has pushed up. The last time we did this, I mentioned that the target I had was around 175, and I wanted to see how it reacted there. Well, we hit 175, I believe it was yesterday, and we've backed off to 172. I mean, it's not a big reversal. The momentum signs are actually really strong. If you look at the daily ADX, it's up around 62, and the weekly ADX, this yellow line, is around 55 and rising. It just goes to the trend strength. That's really what ADX tells us. So those are pretty good signs. I'm sort of the opinion that 175 probably is maybe a short-term hesitation point, but I don't think we're going to get a big reversal off of it. And if we don't see any kind of reaction here, then I think you got to start thinking about 2 as being the next target area.
Okay. And Joe, I actually said the TSX, but we went to the US 10-year yield, which is totally fine because that's what's been driving the markets. We were going to get to it regardless, but just in case anyone's just listening to this and not necessarily looking at the chart. So what you're saying on that, let me
talk about the TSX.
Wait, hold on 1 second. On that US 10-year yield, it seems though maybe we're pausing around that 1.75 level, but when you're taking a look at the momentum indicators, you're essentially saying that we could see it push through to 2%. And I'm bringing that up because, it has implications for obviously currencies and commodities, just to name a few areas to be watching, correct?
Yes. And so the way I look at it, just so everyone's kind of clear, I think typically, and I mean, it doesn't happen like this every single time, but typically any market that trades can usually it'll top one of 2 ways, either on a climax move where it's just like a blow off phase and it just explodes and it climaxes, or it does it on momentum divergence where it's making higher highs and higher lows, but it can't really confirm the new highs, and it shows where the momentum is slowing prior to the reversal. And when I look at this chart, I don't see either one of those things taking place yet. So I'm just sort of thinking right now that it just doesn't look to me like 175 is going to be a big barrier. Okay.
In other words, it can push through that 175 level.
I think so.
Okay. Before we get to the TSX, because the TSX obviously is comprised of a large percentage of energy stocks, and therefore the sector has a larger weighting than what we see in the United States, let's actually take what the US 10-year yield is doing to the US dollar, as well as, and therefore also, of course, the price of oil. So why don't we take a look at either, whatever way you would look at it first, US dollar or WTI?
So here's the dollar. And I think, again, it's easiest just to look at the weekly chart because we can see the big drop off that it had starting in March of last year, making lower highs and lower lows. And it came down to this pretty big support area around 89.90. And now it's getting a little bit of a rally. I mean, I think there's pretty significant resistance, probably up around 93, 94 for this, but what I would consider to be sort of a counter trend little rally that's taking place with a pretty big resistance area overhead. So yeah, in the meantime, short term, I should say, we're getting a little bounce is kind of the way I'd look at it. And then if we look at the WTI, again, the last time we spoke, I mentioned this resistance area we were coming up against around 65. It was actually, because I was looking at the crude chart, I think it's around, on this, it's around 66. But we basically ran up there and hit it. And usually resistance is a lot more important if you do it after you make a big run and you're overbought. So this is kind of what happened. We got really overbought, made a pretty big run. It tried to get through it and then has reversed. So I think there's a pretty good chance we're going to form a little bit of a trading range now where resistance is in that mid 60 area and support's probably in the mid 50s.
And the reason why I bring that up, Joe, is because I think that lately a lot of investors have certainly put money to work in the energy stocks. And you can get a little bit of nervousness when you start to see WTI pull back, because it obviously has a negative impact a lot of the time on the various stocks. But you're basically saying maybe don't panic. We're in a bit of a trading range, a bit of a consolidation phase, just given the fact that we've run so far so fast in WTI. Is that fair?
I would say that is the case, but even more important to me is that I look at I went through every single energy stock with a market cap greater than 300 million this week. So when I go through and look at that, I can see whether there's underlying improvement taking place or whether it's just a rally and you want to just get out. And I think there's a lot of improvement taking place. It's a little on the early side. They are due to pull back or consolidate, something like that. And that'll probably provide a pretty good opportunity. If we continue to do this over time, I'm sure we're going to start to see some ideas coming from the energy area if they play out the right way.
Interesting. Okay. Let's take a look then now at the TSX and what we've seen there.
Yeah, so the TSX is following through a little bit more. Again, last time I mentioned the 18,000 being so important, and the fact that we came down and held that and pushed off it again, I think is a really good sign. The momentum characteristics are okay. They're not dynamic. It's not, the ADX is actually kind of low. The MACD signal looks pretty good. It's sort of confirming the trend. I view it as pretty positive, really. And, I think anything north of 18,000 is pretty good shape. I would consider it to be in a bullish trend.
Okay. Let's take a look here at Bitcoin as well. When we think about the macro events and the money printing going on and the U.S. Federal Reserve continuing to be dovish, we've, of course, had more and more investors want to participate in cryptocurrencies or digital assets. So what are we seeing these days in Bitcoin since over the past 2 weeks?
So, this is really where I was interested in it, down in here where it had been doing nothing for several years, and then it starts to get going. And look at the ADX crossing above 25 at that point. So that doesn't necessarily mean that I dislike it at this point. It's just look at how far this has run. And ADX, which is a measure of trend strength, but it's also an overbought, oversold oscillator. It's all the way up at 77. 100 would be the max. I've never seen anything in the 90s. So something up at 77 is really, really high. It's just telling me the trend is a little overheated. That doesn't necessarily mean it's got to come crashing down or anything like that. It just means the risk levels are elevated up here. I would prefer to look for opportunities to buy on weakness or sell-offs, that type of thing. I think the trend strength is telling you there's more upside coming down the road, but in the short term, there's probably a little bit of risk in here.
What do you think would be the right buy level in terms of the pullback that we could see?
I'd probably be looking around 50-ish, something like that. And the thing is, Catherine, it's kind of hard because this is so volatile. It's almost like, like a Tesla chart that's made a big move and you're kind of like, I like to see the reaction. So if the sellers come in, but it doesn't do a lot of damage, then yeah, I'd probably be willing to look at it at 50. But if they come in a ferocious manner, then I'm going to let this play out a little bit more and maybe look for a lower level. The last major support level was closer to 40. So if they really got this reversed to the downside, then there's probably a little bit more risk. I just would say if I'm in this, I'm fine with it. I mean, you just have to have a long-term time horizon, and don't get too wrapped up in these short-term swings, because this is one of the most volatile instruments I think I've ever seen.
Okay, well, I'm in it. And I've done well in it. And I actually, quite frankly, I'm looking to buy more. I own the QBTC fund. It's a closed-end fund here in Canada, US and Canadian dollars. But I am looking, quite frankly, to get more exposure. Joe, let's take a look at your past picks. When I've been on TV for 10 years, one of the most favorite things that our viewers liked was taking a look. Well, first of all, getting the ideas, and then also, of course, seeing how well you've done or not sometimes. And you gave us a number of ideas 2 weeks ago, and all of them are up. I think there's one that's flat. So why don't we start with Cigna? I think that's what you've got up, and I think it was $228 on March the 6th.
Right. And I'll leave the weekly chart up because that's kind of what my focus is for most of these ideas. And you can see I'm looking for a sideways line, essentially. I mean, I just want to see a stock that's bumped its head on a specific level over and over and over again. And when it does, I start to see how it's acting underneath that line. And I'm looking for signs of maybe some buyers stepping in. And I like the idea where you're making higher lows leading up to the breakout. So once this cleared basically 230, I thought it was pretty important. This is what's interesting is the ADX is just crossing above 25. 25 is kind of like my level where I think you've got enough trend strength to really carry into the price action and have maybe, continue to trend. And so just the fact that it's crossing above 25 based on the buying strength, I think is a really good sign.
So do you buy it here, or it looks as though you might see it pull back a little bit? And do you still buy it?
At this point, wouldn't mind seeing a little bit of a dip, a little closer to the breakout area. I usually look at the breakout level, and I like to be, around within 5% of that breakout area. I mean, it's okay to be up at 7 or 8, but at this point, if I'm going to do this and I want to be in this stock, I might do a third of a position or something like that, start out, and then look to fill it out if it pulls back.
But overall, the chart still looks good in terms of getting in, even though you missed it at 228.
Like I said, I'm not really looking for trades. I'm looking for something that I think can move up for, over the next 6 to 12 months. And really put on some gains potentially. And obviously they don't all do that. And you don't know which ones are going to be the stocks that are going to do that. So, I think it's pretty important to make sure you got the right position sizing approach. Don't go crazy and make a big bet on any one stock, because you really never know. Even my clients never know which are going to be the big winners in their portfolio. So, I'm sort of a big fan of making sure you have some type of a position sizing approach that allows you to take advantage of anything that you're interested in.
Okay. Let's take a look at another one. ABM. I think it was about $45 or so on March the 6th, and it's 50 today.
Yeah. So this one had, I'm only leaving the weekly chart up just to keep it simple, but monthly chart had low ADX coming into this. The weekly chart had low ADX, and so did the daily. So all of these, when I see low ADX, I will tend to draw trend lines on the price action and look for a breakout. And so in this case, when this started coming through 43, it really piqued my interest. And the way it handled it, it made a minor little pullback on the daily chart, I thought was a very, very good sign here. Low ADX tends to mean that you're like building energy for a big move. And so I think it actually moved up on earnings, but the bottom line is we got upside confirmation, and now the trend strength is pretty good.
Let's take a look at another one. State Street had almost been a bit of an underperformer versus the rest of the financial group. And you thought if we could hold above that $80 level, that it could then perhaps participate along with the other financials that have been benefiting from a rising yield rate environment.
Yeah, and it really has been underperforming, frankly, but I like the structure of the pattern, the way this was turning around, and it looked to me like financials are still, I mean, they might try and pull back. So a lot of that depends on what happens with the 10-year. But generally speaking, when you look at a lot of the banks and some of the money managers, asset managers, stuff, overall, they look pretty good. And I think you still want to be considering maybe looking to be a buyer on pullbacks. I thought this was just sort of late to the party, but a lot of times when that happens in a group that's emerging like that, these will play pretty well. And I think there's still plenty of potential upside in this.
Let's take a look at Stanley Works. SWK is the ticker there. That's also done quite well in just 2 weeks. It was 180 when we first spoke.
Right. And so again, sideways line. And in this case, it kind of broke back below the sideways line, but I just like the way it was consolidating. We had a correction in industrials through this period, but it held essentially this kind of breakout area. And the momentum signs were pretty good. It really wasn't much selling during the correction. And so once it started up again, really felt like that, you know, the potential. And again, I'm trying to find stocks kind of breaking out of bigger bases that have potential to go up for a while. And so this kind of fits that pattern.
Okay. Weight Watchers is another one that, you know, obviously is getting a lot of attention in terms of just what's going on with COVID and people trying to get back into shape before we get out again. So it was, I think, around $31 2 weeks ago. So it hasn't had much of a move. What's going on there from a volume and momentum perspective?
Yeah. So one of the things, and this actually happened with STT as well, when you're trying to find turnarounds like this, and I do like to find these because I don't really always want to be the guy buying after the trend's been up for 3 or 4 years, right? I want to try and find them a little bit early. But what happens when you're early is they have these fits and starts. They look like they're going to go and then they kind of pull back. And until you get a little bit more sponsorship by the big institutions, it takes a little bit more time to really get the momentum going. And if you see it, the ADX is still pretty low here, and we're still below 25. It's a little on the early side. I just like the overall pattern. There's a lot of support underneath, and I think the signs are starting to show, you know, signs, a little bit of footprints of money kind of stepping in. So,
okay. And within the tech space, this is one that hasn't moved that much, but FireEye. FEYE.
Yeah, so, and this is actually a good example of why I like to look at multiple time frames. So if we look at a weekly here, you had the big breakout move. In fact, the monthly chart shows a sideways pattern, and then you got the big breakout move. And now we've pulled back to support. I actually would be going down to a daily chart now. This is a daily I'm looking at, with has the same look, but I'm really looking for a change in trend, which would be a break of the trend line. Now we're testing. And now to get the signal that it's really going higher, I kind of want to see this. If we can come back up through, it's around 21 and a half, 21 and 3/4. To me, that's a sign that this trend, this short-term trend, is turning back to the upside. And that's just about the timing. I mean, I think if you're in this and you give it enough time, it'll probably work. But I look at two things. I look at setups and I look at triggers. And so this is a setup, but it hasn't triggered yet for me. And it has to get through 2175 to really trigger me in. If it does that, I'll be very, very interested in this stock.
Okay, one to watch. CMC is another one. You were saying that was breaking out of a big base on March the 6th.
Right. And we've gotten a little bit more follow through out of that base, because that was around 24. I think the stock, I don't know, it might have been 25 or 26 already. It's followed through a little bit more. Maybe it needs to consolidate a little bit. I'd probably be watching for a pullback into the mid 20s or something like that. But again, look at how the ADX has crossed above 25. This is the first time we're seeing that it take place in quite some time based on the buyers. This is based on the sellers, because the red line is above 25 here, but this is the green line, and we can go back a pretty long way. It's been a long time since the green has really taken over leadership, and that just means the strength of the buying is pretty good.
Right, that there's a lot more strength of buyers versus sellers, hence the green line and the ADX moving above 25.
Right. And if I go back in time, you can see we have not been to these levels in a very long time. And that might scare people. You know, people might not like to buy new highs, but I can tell you, if a stock hasn't been doing a whole lot and then it starts to break out and hit a new high, that's actually a very bullish sign. So
Okay.
that's really one of the things I like to look for.
All right. And lastly, in terms of past picks, and then we're going to get to some new ideas, MEI.
Yeah. So, yeah, this is a semiconductor. I had drawn in a trend line here, showed how it broke the trend line, came back and tested the trend line, and then started to turn up. That was very attractive. Again, another sign where buyers are starting to show up. Momentum is improving. I mean, it's kind of doing all the right things. We hit a little bit of resistance from the old high, and it's sort of reversing. The group is probably a little ahead of itself, but I still think there's potential here. Obviously, we haven't even gotten to a new high yet. I mean, this will need to get through 50 to really get things going, I think, in a stronger fashion. But I do like the structure of what's taking place underneath.
Okay. And Joe, just before we get to your new ideas, I think that a lot of people do own Apple. And when we spoke 2 weeks ago, you thought that it could pull back to that 105, 110 level, or at least that's a level to watch. What are we seeing with Apple today?
Yeah. And what has happened since we spoke last hasn't really changed my opinion. I'm still kind of thinking that 105 to 110 area is the target for this move. We have a stock that is showing. So we made a higher high in price, but the momentum MACD made a significantly lower high. And so that was kind of the reason why I was looking at this. And then it broke this 18-week line, and it tried to rally up and sort of failed at it. Whereas this time, if you notice, when it broke it back in here, this was during the market crash, it dropped. And then when it went back up, it went right through it. This is a little different what's taking place this week. It tried to get back up through it and failed. So it just kind of increases the likelihood that we want to come down into, again, it's kind of a zone, but somewhere between 105 and 110.
Okay.
And again, how it gets there is important to me. I wouldn't have an order waiting at 105. I wouldn't be putting in a buy order, a limit to buy it at 105, because I want to see how it gets there. If the volume is heavy or maybe it gets there via a gap, I'm going to give this more time because maybe it wants to go a little bit lower.
Okay. And just thinking about some of the major moves we've watched in the market as of late, obviously financials catching a real bid with that US 10-year yield moving higher. There's so much focus for some reason within the financials on JP Morgan as well as Goldman. Those seem to be the ones that get highlighted. So let's just take a look at Goldman and what we're seeing there from a technical perspective.
Goldman and Morgan Stanley are really the ones that have this really dynamic pattern where you can see. So this is kind of what I look for. Here's the breakout here. And look at how it handled that. Big move to the upside, broke out, and then pulled back and kind of held the breakout area. And then we took off. So this is really the area I'm looking for to be a buyer on that pullback after the breakout. So that's the type of thing I would highlight when in doing my reports and stuff. But now we've made another leg to the upside. I mean, I still like this longer term. I just think in the short term, it's probably gotten a little ahead of itself. Maybe look to buy a little bit of a pullback or something like that. The trend is very strong, but again, it's getting a little overheated.
Okay. Which is why I think we're not really seeing it do too much today. Joe, let's get to some of your new ideas. A small Canadian gold stock, THM. How did this come on your radar even?
So I'm working with a new group. I'm potentially going to be doing a lot of micro cap stocks. It's 300 million market cap or less. And so as I go through and look at, I mean, there's so many of these. The goal for me, and I wanted to look at the monthly chart because I wanted to show, It's all about volume. When you get down to 300 million or less in market cap, it's price and volume. And I think I mentioned this in the last time we did this interview, that it really is, the indicators are good supporting evidence, but price and volume is really where I spend most of my time. If you notice what happened here, I mean, this is a little gold stock, but look at how it was dead. It was just dead from 2013 all the way until May of 2020. And then it just exploded. And look at the size of the volume. So again, I would be looking at this and saying, okay, I am looking for, just like I said with gold last time, I do want to see a sign that buyers are stepping back in. So I kind of want to see this get back up through about 145, 150, something like that, to sort of say that's sort of the trigger that says this is getting ready for another leg to the upside. And the good thing, I mean, the reason why I do that is because let's say gold just keeps drifting lower. I mean, for all I know, this is going to go all the way down to 50 cents again. So there are stocks that are setups, and then there are stocks that are setups and triggers. And waiting for the trigger is pretty important to me.
Yeah, it is just so interesting in terms of the difficulty that some of the gold stocks have had as of late. It was so much more focused on cryptocurrencies and Bitcoin. So it is interesting to watch this. But to your point, we've got to make sure that that the lower level to get in at isn't 50 cents. We'll watch that pretty closely.
Yeah. And, I mean, you just I don't like to predict. I like to look for things that meet my criteria. And then if they meet my criteria, I'm in. And it's kind of funny, Catherine, when I look at the way I look at things, it's Warren Buffett and I couldn't be more different in the way that we look at what criteria we look at. But in a lot of ways, what I try and do is be kind of the Warren Buffett of technical analysis. I am not worried about the market as much. I'm more worried about the individual stock meeting all the criteria that I look for. Where he's looking at intrinsic value, I'm looking at, a low ADX sideways line. And so if I see that in an individual stock, especially something that's an independent mover, it doesn't really worry about the market as much, then, it's going to really intrigue me. So that's really what I've tried to do, especially I would say in the first 10 years, I wouldn't say I incorporated that, but really over the last 20, I've really tried to be a bottom up, look for my pattern. And if I see it, I want to be there.
So, Joe, to be clear, it's fitting a lot of your criteria. It's intriguing, but you're not necessarily going out there and buying it today.
Well, a lot of times I miss it. I mean, if I could watch every single stock, maybe I would have seen this coming up through 80 cents, but a lot of times it doesn't even pass a screen until it makes a move up to $1.50 or $2. And at that point, I'm starting to wait for the next pullback.
Okay.
I don't like to chase stuff.
No, I don't either. Some people are great at it. I am not. I don't do it.
I think it's a lot easier just to make them come back to you. If you miss it, you miss it. I mean, if you really want to be there, then buy a smaller position, start with a smaller position and look for a pullback. But most stocks give you a second chance.
Yeah. It's like dating. Don't chase. Okay. Let's take a look at the healthcare space as well. Healthcare has been so interesting over the past number of years. So many areas within healthcare have been left for dead, not a lot of interest, not a lot of momentum. But, in the medical device area, there might be some interesting stocks to take a look at, particularly on a fundamental front. They can do well on a reopening trade. Also, just given some of the uncertainty, they can act as defensive. So when you're taking a look at a couple stocks here, AmerisourceBergen, I think we've got, we've also got McKesson and Cardinal. What are you looking at here?
So these are the distributors of the medical stuff. All three, there's three of them. ABC, MCK is McKesson, CAH, Cardinal Health. And I'm sort of focused on, in fact, what I want to do is I pulled up the weekly, but I really want you to see the monthly chart because I want you to see what's happened here. I mean, this has been a great long-term stock, but if you notice what's happened since 2015, it has done nothing. It's gone sideways. And now we're starting to see it resolve. Finally, this looks like it's resolving itself to the upside. And the ADX on the monthly chart is crossing above 25 for the first time in 5-6 years. And so it looks like, a big cupping pattern. It looks really attractive. If we looked at McKesson, it's sort of a similar thing. And then we look at CAH, it's earlier in this pattern. I think it needs to get through 60, but it's more of a turnaround pattern, but it's sort of intriguing. I like ABC the most. Obviously in the short term, it's run a little bit. So maybe you look for a little bit of a pullback potentially, but it's still relatively early when you look at the long-term pattern.
Okay. And STX, why did that one, Seagate Technology?
Yeah. And I'm actually going to show you the monthly charts on this. This is pretty wild. I mean, here's this long, did nothing. And then it kind of like got through 30, made a big move up. And then, look at what this, it got up to 70, came down really hard, and then got up into the mid 60s a couple times. Now we're finally kind of emerging out of this, I would consider to be a really long sideways consolidation pattern. And again, ADX is about to cross above 25. We're showing some strength in momentum based on the MACD, just all around signs improving. And again, because this is a monthly chart, you have to sort of assume that you could look to buy pullbacks in this, and this should be a trend that lasts for quite some time.
Not a lot of volume though, right?
The volume's not terrible. We're looking at a monthly. So let's go and look at when this made this move to the upside, that was pretty sizable volume here in January. Right. And it's been more of like almost like a sideways consolidation since then. So not great, not mind-blowing volume, but I would say overall pattern is really attractive.
Okay. And the next one up is CVS.
Yeah, and I'm going to just stick with the theme of the monthly chart because again, we made a peak in 2015 and we've been making lower highs and lower lows. And now all of a sudden we finally found support in the low to mid 50s. And when it came down, it held, and then it rallied up, and then it came down and made another higher low. And now we're finally getting the 18-month line. That's this kind of purplish line rising underneath. And it's about to cross over the 40-month moving average for the first time in quite some time. So it's a little on the early side. I mean, I kind of want to see this get up through 78, 79 to really be convincing, but it's a name to watch. It's definitely a name to watch, I think.
That's interesting. And we're also, of course, keeping our eyes on some media companies. I think the next one up is Liberty Media.
Yeah, so similar pattern, right? I mean, we've been going down, 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 and now all of a sudden we're back above the 18-month line. And I think this one actually looks really attractive on the weekly chart because now we're pulling back and holding the weekly lines, and ADX is starting to improve. It's early. I mean, this is another one that's a little early. It probably needs to get through 28. But just an overall kind of improving pattern taking place from a bigger picture standpoint.
Yeah, that looks really interesting. And then lastly, just staying with some of the, the defensive themes and areas of the market, which, I often like at least to add to my portfolio, just even from having some dividend payers in the portfolio for the long term. A couple of names do look attractive here to add to your portfolio.
Yeah, so look at so we're starting to see a little bit of sneaky volume here in this is Atria MO, right? And we're breaking this long-term downtrend line. Been years. I mean, this has been, 2-3 years of declining. And now we're just starting to see a lot of strength take place recently. What interests me here is, this is paying almost 7% dividend. To me, this is the type of stock that because it's turning around and the way it's doing it, I'd look to take advantage of little pullbacks in this. And it's not one that's going to be a rocket ship to the upside, but it's probably going to be a good stable play over the course of the next year or two. And again, you have that dividend that it's paying. And then if we look at PM, very similar. Philip Morris is very similar pattern. It's trying to work through this 90 area, which is pretty important. But in the process of doing this, it definitely looks like it's cupping around. We're starting to get a little bit of volume to show up. And again, this is paying over 5%. So that's kind of interesting. And then lastly, ConAgra has it has actually pulled back. Look at this with 2 time frames. So the monthly chart is pulling into the 18 and the 40-month moving average. And then on the weekly chart, you're breaking this downtrend line. So again, just little signs of improvement here in a stock that's paying about a 3% dividend. Again, it's not going to be this rocket ship, but probably ends up being pretty steady. And I think there's pretty limited risk in all 3 of those stocks.
Interesting. So Joe, let's just kind of wrap it up now, and just kind of reflect a little bit in terms of what you've been doing for institutional investors for the past, well over 2 decades. I want to say it's 3, just over 3. And the reason why this is so important, it really is because what we're providing today to viewers is the ability to access somebody who really has only ever worked with institutional investors. And that, of course, lends itself to what you're offering people in terms of your research, access to your research. So just tell us a little bit about that.
Yeah. So the original research was designed for institutions, but I do think it's applicable for individual investors. And also I have made some changes to the way I produce the product over the last year to make it more applicable for individual investors. So really what I do is I try and provide individual stock ideas. And that's kind of the backbone of the research. I supplement that with other things. But twice a week, you're going to get a report from me that definitely gives stock ideas. One on Monday from the weekend review, and then another one that's by going through all the sectors during the course of during the course of a month, and then providing kind of the highlights from that. And I do that once a week. So the only thing I wanted to mention, Catherine, about the last time we did this, I had a Catherine coupon. And so it's still out there, but what I didn't realize about the coupon was it didn't allow for recurring billing. So anyway, just to keep it simple, it's $50 for the first 2 months. So you get to look at it for 60 days for $50. I think it gives you a pretty good idea of whether it's a type of information that can be useful to you or not.
Yeah, absolutely. And it's it's so interesting when we take a look at the world that's been going on in terms of the retail investor really participating in the market as of late. Of course, we know that through Reddit and Robinhood, and also just the volumes and the ability for retail investors to move stocks, i.e. GameStop, whatever you think of all of that. But I think that what we've really been seeing is the democratization of investing. And so I think that what we're doing here, Joe, with you, being available to individual investors is part of that move and that movement. And I think that that's really great. So for anyone listening, viewers, individual investors, and there might even be some institutions or small institutions as well, take advantage of it. So take a look at Joe's research. As I think you guys all know, I've been using him with money managers on Wall Street prior to my TV career. With great success and incredible feedback from some of the biggest money managers, right, Joe? I mean, they really have been.
Right. And just to make mention, it is rabilstockresearch.com. I don't think I mentioned that. And I think you're going to put that in the description below too, I think. So
we absolutely will. All right.
Yeah, but it's been a great relationship with you, Catherine. I've really enjoyed it over the years. You're even prior to your time on BNN, you're a great market person, and the viewers are very lucky to have you out there.
Thank you so much. Well, we'll continue to do more. It's always interesting and exciting, that is for sure. So we'll wrap it there. Joe, great. Thank you. And we'll see you soon.